Welcome to Power Charting. I'm Bruce Fraser, your host, and this is about the most fun that I can have is that I get to have my friend Andrew Cardwell join me in a Power Charting episode. Andrew, welcome.
I always enjoy fun because we inform, educate, and entertain while we do this.
Well, we entertain each other.
From the comments I've received, they said, it's like watching a comedy show, but learning something and having something to take away from it.
Well, thank goodness, because it's like this is not a funny business sometimes.
No, it's a scary business if you don't know what you're doing.
So the thing that I thought we could do is we could intersperse some trade talk and trade talk with Dr. RSI, because you and I both are celebrating 40 years in the business, and you a little longer than me, actually, I think. And
let's not rub it in. I just had another birthday. I'm still celebrating the anniversaries of my 39th, like Jack Benny.
Well, happy birthday. And so the thing about this whole business, well, let's do this. I'm going to put this up while we're talking, but if you'd like to get a hold of Andrew, find out more about his wonderful courses, and he even has you have an ability to talk to him via Skype, and once you connect with him.
But share screen,
yeah. So the thing about this business is that longevity is really, I think, important. And you don't really understand that until you've been around a long time. And the term that always comes up to me is failing forward. And because it's, it's like that saying about golf. Golf is not a game of perfect.
That's right.
And trading is certainly not a game of perfect. And so, you're always being humbled by the markets, or I am. I'm speaking for myself.
Oh, I am too.
And so 40 years of being humbled is humbling.
Yep.
I must say.
Well, we're about the same, because I've been here since 78. And I've learned a lot over the years, and not just the RSI, but other tools I've learned, and being myself and understanding myself. Why am I trading? I always tell people, you worked hard for your money, make it work hard for you. Learn how to trade.
One of the great opportunities I had was to teach school for graduate school, teach technical analysis in all its various forms for 30 years, and 27 years of which I was able to teach various Wyckoff courses, and with Dr. Pruden, and we had a blast doing it. And one of the courses I taught was a course on strategy and implementation. And this was really a course about peak performance, portfolio management. It was about developing methodologies and trading systems. And I would assign the students the assignment was to, at the end of the semester, to deliver to the professor, their trading system. But included in that was they had to be able to define their edge. What is the edge in your system that allows you to be able to execute, turn the crank on your system over and over throughout time, and to be able to replicate performance? And so that's really important to, I think, to success. And it was one of the hardest things in the world for students to do. But if they were able to do that, then it gave them a level of confidence going forward about what they were doing. And one of the things that I believe in my many years is that the most important edge in trading is trend. And trend is really important. And the other one is risk management. And I think about Bernard Baruch. They asked him, well, what's the key to your success? And he'd say, I take the 2/3 out of the middle. That's right. And so, it's pretty simple, but he was able to immediately define what his edge was. And you take somebody like Jesse Livermore, and, when he was on his A game, he would effectively say the same thing. And so tell us a little bit about the edge that we get from RSI edge methodology.
Well, the first thing I shared in the very first class I taught was trading is a function of what I called primotus. P for price, M for momentum, T for time, and S for sentiment. I called it primotus. You have to understand you're looking for that trend and what those guys were saying about take that 70% in the middle. Don't try and pick a top or bottom. If you've done your work and you see a bottom forming, then you start watching for a confirmation with price action. You're not going to, the market's not going to do what you want it to do. The market's going to do what it will do based on the price, the momentum, the time, and the sentiment of others.
So good traders are really good at listening to the market.
Oh yeah, you let the market show you what it wants to do. If you think you've got a buy signal and the market agrees with you, or you're agreeing with the market, because the market's never wrong. It's the traders that are wrong.
Yeah, my experience with students was, and of course, I'm sure I had to learn this for myself too, is that they wanted to be right. And that was a very difficult thing to be able to allow yourself to recognize when you're wrong. And I think one of the best ways you can recognize you're wrong is to get stopped out.
Right.
And this is why it's not a game of perfect. And
and I've always believed that, because even a baseball player that wins a batting title, batting 350, he's only getting a hit every 35 times out of 100.
That's right.
But he's still one of the best hitters out there.
Yes.
And this idea that people, they know more. The market's going down, they're buying it. The market keeps going down, they're buying more to dollar cost average, instead of saying, hey, recognize where you're wrong before you put the trade on. What would it do? What would it have to do to tell you you're wrong? And that's your stop point. And when it starts to go in your direction, what do you need in terms of confirmation? Price rising, momentum rising, or if you're short, falling. The traders got to get their minds right too. And I learned a lot of that from Mark Douglas.
Yes, he wrote phenomenal books on trading psychology.
Yeah, his first one was the best, The Disciplined Trader.
Yep. We used to have Mark come out to Golden Gate University and speak to our classes. And then we would get together. So the great times for me was to get together with these wonderful market thinkers and be able to have them in the classroom, and then also be able to spend time with them at dinner and be able to hang out and just talk philosophy and
well, go ahead.
No, please.
We, Mark and I met up in San Francisco one time. We were doing a conference in Hong Kong. So I had 16 hours on the plane talking to Mark. That was unbelievable. And I said, what are you doing? Writing a book? Because he kept asking questions. How'd you feel about this? What made you do this? Why did you do that?
Right.
And when the book came out, I said, wow, I really enjoyed it. And I told him, I said, that's going to be a key to a lot of people's success. You got to have your mind right.
Yeah. So
and the thing that stood out most, I always remember, and this is one of my things I've stayed with for 40 some years. He told me the market can only do 4 things: go up, go down, go sideways. So that tells you that you can buy, you can sell, you can do nothing, and you can hold your position. But the doing nothing is actually a trading decision. And a lot of new traders say, well, you got to do something. I said, not necessarily. A lot of what you see during the day is noise and a bunch of short-term traders. You have to identify trends and be willing to see them when they start, and be willing to notice when they're starting to top out or bottom out, and be willing to change.
Well, I'm not going to talk about the Wyckoff method today, but the whole notion about in Wyckoff is, say, for instance, in the idea of accumulation, is that you have to build a cause before you can go up. Right. But it's the subsequent trend, which is where all the opportunity is. and
Right.
getting into the markup phase. And there's the psychology of most traders becomes very different when they get into a market where you have a fast moving market that is just emerging into a new uptrend.
Right.
And then all of a sudden people are just, they're frozen by the fact that the market is just turning and running and they just can't reach up and buy them, where you literally have to mentally train yourself to be able to buy when the market starts to become really active and takes off, and then know strategically where to put your stops. And actually what happens is the power for us is that we become confident that we know that we've defined the limits of our risk by putting stops in strategically good places. But we're into these markets that are really moving. If you really want to read somebody describe the phenomenon of that, is to read Reminiscences of a Stock Operator with Larry Livingston, who is the fictional character for Jesse Livermore. And he just does such a wonderful job of describing a market that's moving. And
Well,
then,
I just want to interject here.
this is what it, yes.
Where you have that backup phase.
Mm-hmm.
Okay?
Mm-hmm.
When it moves that quick, people say, well, it's just a bounce and it'll come back up, or, it's going to continue down. It's going to continue. And you see from the backup phase where the confirmation's coming from. It's now going to higher highs.
Yes.
It's now moving. And if you were short, there's your price confirmation. It's not moving the way you first thought. You better go back and look at your chart again.
And what really can drive the initial leg up is short covering.
Oh, yeah.
Because these people are panicking out of a market where there's been tremendous absorption by strong hands, and literally supply is low and demand doesn't have to change very much to all of a sudden have prices skyrocketing.
And the sentiment is changing on the part of traders.
Yes. Yes.
They say, well, I've been short, but it's not going down anymore. It's eating into my profits. Well, at least take the trade off and look at it again in a couple of days.
Well, let's do this. I'm going to pause here for a second because we're going to give Andrew the screen. We can keep this conversation going and as we go, but we'd like to have Andrew show us some of the markets he's interested in. So we'll be right back. One brief announcement before we move on, and that is that we have a free Wyckoff market discussion complimentary session coming up on April 6th. We'd love for you to be there. Just go to wyckoffanalytics.com and sign up. It's absolutely free. Roman Bogomazov and I are going to talk about all things Wyckoff related to the current market environment. So join us. We are back with Andrew Cardwell, Dr. RSI, and you're going to show us some markets. What are we looking at here?
Well, these markets, stock markets especially, have been extremely strong. You can see in the top chart, that's just a couple moving averages. We can see the moving averages that I use on RSI. And I always watch with one of the things I'm famous for is the range rules. RSI is not 70 and 30. And I remember when I met Wells Wilder, I was talking to him about it. And I said, Wells, I didn't change your formula or anything. I just adjusted the range for 80 and 40 on the upside and 60 and 20 on the downside, but still kept the same 40% or 40 points. And I didn't put as much emphasis on bearish divergence. It was just overextension leading to correction and then higher. And when it got to the bottom, see a bottom come in that was overextended to the downside. It was usually down around 20 or 25. But
so these are really classic trend following attributes of the RSI. So our people use RSI for overbought, oversold, but what it really does is it gives you a framework for the trend.
Well, not only that, when I combined one of the special sections, one section I did in my edge course, combined the range rules with the moving average to see when that 9, if you see this 9 moving average here on the second chart, went above 60, told me it's turning up and it was getting stronger. And then the 45 went above 60, This was back at 31,000. This was back at 29,000. And now we're at 35.
Yeah, it's like one of the things that I really focus on in any indicator that I'm using is directionality. So if I can define the directionality from a good indicator, one that I think is really powerful, basically really what I want to know is the directionality up or is it down? And then I follow the directionality of a good indicator.
Well,
and so that's what I love about the RSI edge.
Yeah, most people, say, well, you just sell at 70 and you buy at 30. You'll go broke doing that. Because when I applied the moving averages and combined them with range rules, it tells me when we're getting ready to accelerate to the upside, or if something's falling.
Directionality, brilliant. Yeah.
And that's just first, that 9 crossing 60 is just the first initial start of the first start of initial acceleration.
So that's a classic, like correction in an uptrend. Those are beautiful places to be initiating or adding to positions.
Plus the positive reversal patterns I've developed based on RSI can help me set targets. So
show us how you're currently interpreting the Dow Jones here. And you're looking at a weekly.
Yeah, because I think anything less than a daily is noise. Like Mark said, you can buy, sell, hold, or do nothing. They're your 4 choices. And when you get on something that's in a strong trend, you definitely just want to hang on and hold.
Yep.
Because you'll get scared out of a market during the day.
That's taking the 2/3 out of the middle.
That's it. And that's I don't try and pick bottoms. I let the RSI show me where a bottom is.
Beautiful.
And I did it for the first 10 years without a computer.
I think that's what a lot of Wyckoffs do too. And in the accumulation structure is they're waiting for confirmation that the accumulation has been completed, which inevitably means that the market is already starting to show classic strength off the conclusion of the accumulation.
Well, the RSI coming from the lower levels and breaking above 60 is telling you things are changing. But when you see the moving average, it's telling you things are going to start accelerating.
Yeah, see, that's like.
And I wasn't trusting this market, from December 20 all through 21, but there was no reason to be selling. I said, you got to hold on, watch for positives, watch for an acceleration in the trend, watch for bearish divergences like kind of formed back here. But it just turned it sideways for a couple of days. But you can take a vacation. Take a vacation, see where it closes. During the day, it's going to look like, whoa, a casino. But if you notice, we had those peaks. Those peaks were almost a year ago in momentum. The momentum is much lower. And
that's in Wyckoff, that'd be the process of building a cause.
Right.
So when you stop the upward momentum, often called a buying climax, then you're starting to build a cause for either another move later in the same direction, or you're building distribution. So tell me what you're seeing. Tell me what you're seeing here.
And we went to a new high, but the RSI only had a rally where it hit its head on the 45. And the moving averages here had turned down.
So well below the 60, so it's 60 on the high end of a bear.
Yeah.
60,
up at the top of the bear range. So it says, hey, we could be changing.
Yeah.
And the RSI started to drop. The RSI here got down to 43, got down to a low of 35. But now we could be having another head bump and turn lower. And the weekly charts, and even let me take a quick look at the monthly.
So this rally that we've been in for the last few weeks could be exhausting itself because it's having a head bump here on the RSI.
Yeah.
Interesting.
And the monthly is interesting because you've got a momentum high way back in 18. We sold off. We came to a low with the pandemic. We started up. Now you've got a much higher high. And you can draw a trend line on that as a bearish divergence. And then you have two little, let me zoom in for you here. You had a high in price and RSI, which created that long-term divergence, a sell-off, rough month, and back up 35,819, sell off back up 36,38, and then the deeper sell off. But look at the float, or look at the rollover that's taking place in the moving average.
So those are
Just-
like head bumps on the shorter term moving average.
Yeah, they're running
Now-
into resistance at the 9 instead of the 45, and now we're setting up on the monthly. That's why I'm
Now, I
looking
would
forward.
point out, just looking at the monthly here, that look at the monthly bars. Now, by the way, this is the last day of the first quarter, March 31st.
I'm looking forward to tonight's closes for that reason. Monthly
Right,
close,
very
quarterly
important.
close.
Institutions all function in the quarterly timeframes, the yearly and the quarterlies.
Mm-hmm.
Very important. But look at the increased volatility off the highs on the monthly bars. That's why I like to look at monthly charts. So volatility is increasing off the peak, and that is a classic characteristic of distribution. And
Right.
so very interesting here. Now we have a higher low in the month of March. That could be helpful, but still the volatility is extremely high and the highs are lower. So caution.
I've noticed over the years, the increase in volatility is the struggle that goes on between the bulls and the bears
Yeah,
just before intermediate and major trend changes. That's
Yeah.
why I said looking at a daily is noise. Looking at weekly and monthly, then you're starting to see the big picture.
right. So you really need to be encompassing all three timeframes.
Right, but understand that each time frame longer exhibits pressure on the markets. Helps. I mean, when you start seeing the daily chart go up, but the weekly charts and the monthly charts are still down, it's probably nothing more than a bounce.
Well, and so we just saw on the longer term charts a head bump on your
Yeah.
RSI. And so look at how different the daily characteristics are.
And look at where this was a peak in the RSI back in February of this year, early
Mhm.
February,
Mhm.
and the price difference, 35,768. Now we're at much higher highs in momentum, but we're only at 35.3. Lower price, higher RSI, which tells me longer term that things could be changing on an intermediate basis. We could have some rough times ahead. Let me look real quick at Nasdaq. You'll see
So
the
this is a
same.
really important point. And of course, this is all coming right at the end of the quarter, which is fascinating.
Right. And I think that's going to be the telltale sign, which is going to wake people up. Here we're going.
So now we're
lower,
looking at the Nasdaq 100.
where we almost had head bumps, but the moving average 9 went sideways. They were above 60, but now both have dropped. The RSI daily came down, or weekly came down to under 40. So this is going to be worth watching. There's weekly and there's monthly, and it's starting to break down.
Weaker than the Dow off the
Uh-huh.
peak. Yeah.
Because it was the strongest one going up.
Yeah, very strong. It's leadership.
Okay, takes me to, we'll take a quick look at oil. Because I've been bullish oil since 63, just under 70.
Mhm.
And it's done well. It's been volatile all the way up to 130 from under 70. Okay, combo. That's going vertical. Parabolic.
We're looking at the monthly bar
That's
there.
the monthly.
Mm-hmm.
So it turned up, it got up over 70, got up over 80, and it built a momentum high, but no price high yet. I still think that's to come. I think we're going to see a change. Now, this one, the RSI got all the way up to 75. Then the moving averages come down. And then even my personal indicator with RSI at the bottom of the way that it's a little more sensitive. But that had like a little bearish divergence almost, and it didn't even form one. You almost had a head bump at the recent rally high. So there's some downside to come, because I think this is, when the changes are subtle, you don't realize it until it's halfway there. And that's why I say you cannot get the market to do what you want it to do. You have to allow it to show you. And that's what I tried to do in my coursework. because the RSI encompasses the price, momentum, time, and sentiment of traders, the range rules, the moving averages, being able to see patterns that suggested trend changes and setting new price targets in the opposite direction. So I've lived and danced with that lady for a long time.
Well, this is fantastic, Andrew, and we're coming right into the end of the segment, and this is such a great place for us to close on. And so why don't we close out the primetime segment, and if you have one more market to look at, we could look at that in overtime.
Okay, well, I just had this one here.
Okay, I'm gonna sign off here, and then we'll come back in overtime. If you're on demand, stick with us. We are back, and we are with the legendary Andrew Cardwell, Dr. RSI, and on the last day of the quarter. And Andrew, we're going to talk a little bit about gold and the dollar. So what are we looking at here?
Well, gold to me was one of the first markets I started following in the late 70s. So I got to see what inflation's all about. And I one time was talking to my economics professor, and I would tell him what gold was going to do with inflation. He said, well, you must have had a good professor. I said, Dr. Ryder, you were great, but the RSI outdid you. And I don't go to the textbook anymore. But I even tell people I sleep better when I have a gold position on. Okay, I want to do this to monthly to start. And you notice that we never really went below 40. There was 42. Here we come down to 37 during that month, but immediately started to turn back up, and the moving averages on RSI turned up. RSI went above 60 back in November, or excuse me, back in August of 19, pulled back to a 59 at about the time the 9-period moving average was getting ready to go above 60, say an acceleration. So I think we are still in a long-term uptrend. We had a shakeout this month. That's why I said we needed one. But even so, the RSI is still moving higher.
Fascinating.
That's
looking at monthly.
That's monthly.
Yeah.
And when you see how dynamic gold is and just really go out, I mean, it's been beautiful. I lived this 1978 to 1981 level. Well, went a little too far for what I wanted to show. This was 2002. The price was about 700. I told people it was going to 1,000. They told me I was crazy. When it got over 1,000, they said, that's it. I said, yeah, it is. It's a great buying opportunity. That was 2008 at around 1,000, 1,100. And we went all the way up to over 21 on the futures. But we came down, and you look back here at this low. We'll call this one, say 1,100. We'll call this low 1,250. That's $150. With one of my positive patterns where we get more overextended at a higher price, when it reverses, it's going to take out that high by about 150, which was around 1950. Said it should go to 21, and the higher, it was about the high close. But intraday it had been up to 21. I think it's gone to 2,300. Come back to the daily.
Classic reaccumulation structure from a Wyckoff perspective.
Down here?
Well, both in the monthly time frame from 2011 over, and then also in the small time frame that occurred over the last 18 months. I say small, it's really quite large. So
yeah, but look at the beauty of that 9 going above 60, and then the 45 going above 60, staying above 60 on the
beautiful trend following technique. Yeah, it's fantastic.
I slept well. I didn't have to worry about too much. And that takes me to quality versus quantity. There's 10 great trends, whether it's in futures or a stock, commodity, 10 good trades a year. But if you find the 3 or 4 that are exceptional, then you rest well. You don't stress as much. You have more time with your family. You're managing the trade, which a lot of people don't do. They just buy and sell and buy and sell. manage the trade when you realize you've got, one of the big ones there.
And what you're
Strong one.
really saying is managing the trend.
Yeah.
Yeah, you're
Managing the
managing the
trend,
trend. Yeah, I
manage
mean,
the
it's like, yeah,
trend.
managing the trade, but you're managing a really good trend.
Right. And even looking at the weekly, this has been up since summer of 18. And then that 9 went above 60 here, a little pullback, and then the 9 went above 60, then the 45 went above 60. And we're selling off. And that first big sell-off only took it down to about a 40 on the moving average. And now it's
Range
starting.
rules.
Now the range rules are starting to kick in. And it looks like this 9 period on a weekly is starting to accelerate. It's getting ready to go back above 60. I wouldn't be surprised to see 24.50 on gold. And the same thing for silver. I can see $40 or $50. Take a quick look at the dollar index, which I think is surprised a lot of people. But we had a range shift to where it come down to an RSI of 33. Then it went sideways for a while on the weekly. Then it bounced off the 45 in the RSI when the RSI moving averages were turning higher. The 9 stayed above the 45, kept me positive. And we accelerated, breaking 60, and the moving average went up above 60. So it's still strong. It's coming, showing a little bit of a divergence on a weekly chart. But the beauty is the range rules will focus on the trend and keep you in it longer. You might get scared that, you can't go up forever. Well, you don't see a sell signal where the range is starting to shift or one of my negative reversal patterns. So I'm still positive on the metals going forward. And I think the dollar is tracing out some sort of top that could be with us for a while. But I'm going to watch for confirmation. This last rally, the RSI only got to a 64. That was at 99.15, and it did not take out the high on a closing basis back then, which had been to before. So I say 99.5 is the upside, and 97.50, maybe 97.75 is the low side. But these moving averages are turning down. The RSI is turning down. So we're going to be seeing some quite interesting times going forward. And I say, especially in the next 2 months, because the inflation is still rising. Commodity prices are still rising. I'm still bullish on coffee going to $3, cotton, sugar may go to 22, 24. This inflation cycle is still with us. And now you're going to have the Fed raising rates. And they talk about the inversion on the yields, the 2-10 spread. That's going to affect more the stock indices than it is the commodity futures. So it's going to be an interesting rest of the year, and I'm really looking forward to seeing where these things are tonight on a closing basis, quarterly, monthly, and weekly, because tomorrow will give us the weekly.
Well, Andrew, thank you so much for talking trading with us at Power Charting. It's been fantastic. It's always such a joy to have you join us, and I'm looking forward to doing it again in the future. And
I always enjoy getting with you and trying to help out, because trading is it's a stressful game if you don't have any methodology and discipline and rules to trade by.
There it is.
But position trading far outweighs short-term trading.
Your wise thoughts have rubbed off on us today, and we're so grateful to you. And with that, we'll sign off. Thank you for being in the overtime segment, and we'll see you all next time. Take care, everybody.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.